Yeah, I'm losing my
Interest rates,
edge.
this is a question that we get all of the time, no pun intended. And this isn't a matter of like, when do I put on a futures trade, Pete, as much to me as it's like, how long should this thing be on? What should I be looking at to create my
Right.
story here? I had someone email just today about relative strength indices. And while we don't use relative strength indices or other similar indicators, we do use historical context. We use charts and we look at data and
Right.
stuff like that. And this is a great question, which is always like, how long in the past should I look at? Because using interest rates as the backdrop today, if you saw just yesterday's activity and today's activity, yesterday was a huge rally in interest rates, and now they're almost up to $11 in S10Y futures, which is 1.1%, which is a place where we haven't been to since the beginning of 2020, Pete. And if you look at this, and you're a contrarian, it's like sell, sell, sell. If you're a trend follower, it's like buy, buy, buy. But that's only one day's context, right?
Absolutely. And you know what? I think that's a great, so a 20+% move in 2 trading days.
Yeah.
Huge move. That's one of the wonderful things about trading yield is you do get great percentage moves,
Yeah.
but the size of the contract makes them very consumable, and it lets you have a little bit of flexibility if once you get comfortable to add a couple of units, which lets you take advantage of 20% moves like this. Are you buying into this 20% move? For me, if I was to add longs here, I would then look at, okay, either what could I put against them? Can I sell some premium in a similar product and look to basically create a covered call, buy this, and how could I, since calls
Sure.
don't exist yet in the small exchange products, how could I add a little premium to this trade? And at some point we'll talk a little bit about that, but not today.
I don't even want to get that far
No.
down the line. I want to stick with the simple buy and sell. And I just
Yeah,
want to walk
absolutely.
through a couple different time intervals here and paint the picture for people and hopefully conclude at a place that helps them in future trades when they ask this question of how should I time these things in the future?
Right.
Hopefully they have a good grasp on it. Because then you also, okay, let's look at, a 5-day forecast that the small exchange sends out to subscribers on Monday, saying that by Thursday or Friday, the projected upside in these markets is $10.16 or $10.28. I mean, Pete, do you have a quote for me right now in S10Y futures?
I do, my friend. It is $10.79.
So we're well above this projected high for the week. And so once again, if I'm a trend follower, I'm like, wow, this is a bullish trade to get in. If I'm a contrarian, I'm like, wow, I need to sell this thing and it needs to come back into this range. But Pete, as I start to add just a little bit more data here, you see that from 2020 until now, the average price here for S10Y futures is about $12. The average interest rate is about 1.2%. We're not there yet. When I add a couple more years, Pete, you see that, oh my gosh, there's a ton of upside here. Now I've gone from being if I'm a contrarian looking to sell into this to, if I'm a contrarian, I need to buy this thing all the way up to $20. And if I'm a trend follower, this thing looks like it's going to dust. And then if I add even a few more years here, it's like this thing has been as high as $40. We've been as high as 4% in the last decade, and we're barely off of these lows. And it's so funny because I'm glad you bring up the fact that in the last 2 trading days, this market's up 20%. Yeah, it's up 20% off of historical lows. And so this becomes, and I know that I'm confusing people. The whole point of this conversation, this exercise, is to confuse people because I want to arrive at, okay, am I supposed to be long, short, or both? And I would contend, Pete, that it's funny, and I know that you've got the whole joke, I'm long and short at the same time. I think you can be long and short at the same time. And what I mean by this is you and I, Pete, have had, and I think a lot of people, especially since the fall off here in 2020 and the fall off from the last couple of years here, have been long rates. Okay, we've been bullish on S10Y. S10Y and yields or rates, whatever you want to say, returning to at least some semblance of normalcy, 2%, which would be $20 in S10Y, or even 3%. That's normal over the last couple of decades, over historical averages there. in the long term, yeah, I still agree with that. And I would say, okay, maybe I'll be long a couple S10Y contracts. That's in my long-term portfolio. That being said, Pete, I have absolutely no problem, and I'm actually chomping at the bit to
Yeah.
get short just this week, right? Like there's nothing wrong with me being long S10Y futures. Like I said, having a portfolio or 3 or 4 or 5 of them and being like, I'm going to hold these and roll them out until we get to $20 or $15, whatever you're looking for, that return to normalcy there. But when you get 20% higher in 2 days, I am absolutely looking for a small reversal. And so maybe I'm long 4 or 5 contracts and I'm short 1 or 2 here just this week, looking to scalp in the short term. And Pete, maybe you can speak to this, reduce the cost basis of those longs, right? This is probably one of the best ways outside of, people always talk about selling calls and all of that. Futures afford you in short-term activity great cost basis reduction.
Absolutely. And that's why we're active futures traders, not hyperactive. And there is I've seen so many guys when they don't have a strategy and their mechanics work, they buy them and they don't like it. I want to be short. It's that trying to let the market determine their strategy rather than deploying their strategy into the market. And I agree with you. I managed half of my small tens position today, not because my bias has changed, which is for yields to move higher, but the 20% move you take and look to, as you mentioned, I think my cost basis was 93 basis points. Now I'm looking to, by managing some of this, look for that little bit of pullback here. Do we get back under 1%? I don't know, but I certainly like the idea of looking to buy, a shade over $10 here and improving my overall trade location and improving my overall returns. You can't, and here's the thing, you're getting the flexibility with smaller products that you can scale a little bit. You're getting the ability to, I don't want to say have your cake and eat it too, because there's a semblance here. Market could continue to march right up to 120 basis points or $12, but I still have some longs on. Do I have all of them on? No. And that's a situation that will sometime occur, but I don't walk away from a 21% up move and say that I can't manage anything. You absolutely can. And I think you speak to the wonderful nature of premium and being able to trade options. The premium is an important part of a diversified strategy. But in 2 days, even if you had sold puts in this, it would have been hard to pull as much out on a 45-day option. It's just not the nature, especially a put spread, of the way they work. So it's a fine addition to our trading, but this is an important part of I think what you said is the simplicity, efficiency, and elegance of trading straight static delta futures.
Yeah, and you can look at it however you want. I like how you have the angle of like, all right, if I'm long 4 of these, I can manage some of them at 1070 and then look to buy them again at 1020 or whatever. Totally. I was kind of looking at it through the standpoint of if I'm long from, $9 or $10,
I turn myself around. Yes.
I can sell a couple of them and scalp around that. But yeah, you are in essence managing a couple and then buying them back lower. However you want to view it, I really think that there is this idea of looking at this chart here and being like, wow, I want to be short here. Absolutely. And then looking at this chart and being like, wow, I want to be long here. You can actually do both. And this is what, this is a good way to conclude this segment, because we're talking about timing futures. To me, when it comes to, how far should I look back? What should determine whether I'm getting long or short? Well, what are you looking for with this new trade? Right. If I'm looking for an intraday scalp, Pete, all I'm looking at is the action here today. Right. The last 24 hours, where has this market moved? Right. Like we talk about all the time. Sometimes you and I, if we're looking for short-term trade opportunities, I'll just look at the net change. I don't even pull up the chart. Right. Sometimes the chart gives you nice context of, if a market's up 5%, but it was just up 10%.
Right. It should never be the sole determinant of your strategy. If you're just basing it on, again, I'm not an advocate of just trading from the charts or drawing lines on the charts. I put the caveat of if it works for you, stick to it. But I think that what is your strategy? We're not forced to have just short-term strategies or long-term. And this is the perfect example of, does that long-term chart stop me from looking at a short-term scalp? Absolutely. Absolutely not.
Yes, no.
I'm sorry. It's the context that gives me. Context is good. No one slice of a visual should be your sole determinant of what your decision making is. It's just putting context around your bias. And I agree with you. If you wanted to be more aggressive and you had caught this nice up move, you could turn yourself around here. And what I like about turning yourself, what I mean by that is actually take off the longs, add a couple of shorts.
Sure.
But what sets up here for me is you've got a contra trending short. You're going to have to put a relatively tight leash on that. But where we are right now, the leash is already defined for you. It's 1060 if you're wrong. And then you're looking to cover them back as we drift back down to $10. So there is contra trending strategy. Mechanics lay out for you, and you got to stick to them. You're not covering at a new high. You're covering a contra trending scalp. And that trade sets up, if you're more aggressive, absolutely.
I'm glad that you wrapped in some of the mechanics, because we'll end there, which is to say, like, okay, if I'm looking at this chart and I see short-term opportunity here from selling into this if I'm a contrarian, buying into it if I'm a trend follower, then yeah, I look at this y-axis and I'm like, okay, I'm looking to take 30 cents out of this trade, 20, 30 cents for a daily trade here, which is great, because I can say, all right, I'm selling the 1040s and I'll either be out for a loss at 1070 or I'm out for a winner at 1010. That's realistic mechanics for a short-term trade. And what's great is that even if I lose that and the market moves higher and I had these longs here because I looked at this chart and I have long-term long positions, I lost 30 cents on that trade. Right. And all I was trying to do was help that cost basis and help out these longs. So yeah, in conclusion here, if you're looking at this chart and you're saying this long-term chart is it's inspiring a bullish position for me, then you have to be saying to yourself, I'm holding this for the next couple of weeks to months, because this is long-term context. The same for if I'm looking for short-term trades, I'm looking for short-term opportunity, I'm just looking at the last few hours or last few days of activity. Your timing in futures should be dictated by the context that you're using, and then you wrap the mechanics around that.